Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning. I'm late. I'm sorry. Super late. I don't know what the deal is. Something was weird with me today. Because I woke up this morning. The alarm went off. I looked at the little, I have one of those alarm clocks that's like, you know, do the math problem. I look at it. It's 90. And then I entered in and like blackout or something. I don't know. Like, I've literally never like slept through my alarm ever in my life. And this morning I was like, okay. It just, I woke up like 5 minutes later and I'm like, what's wrong? What's wrong? Why am I not in the shower? So like I sped through everything. I'm a little bit late. I'm actually like super surprised that I was able to get ready that quickly. What was this? Oh, I accidentally opened up to, yeah, okay, let's fix that here. There we go. Okay, so, I have a little bit of a sore throat. So, I may be getting sick, and maybe that's why I slept in. It may just be allergies. I do kind of think that what's going on may just be allergies, because oh, I'm muted? No, I'm not. Wait. How could I possibly be muted? Test. Am I still muted? Octavia says you're fine. Okay. I don't know. So, I'm also, you know, I don't know. This workout cycle's been different, guys. Something's up with me. I don't know if it's like, you know, I'm taking better quality supplements. I'm not like taking anything crazy and just like creatine and better fish oil and stuff. Trying to go to sleep earlier. I'm doing better this workout cycle. Way more aggressive with my lifts. I don't think that my max strength is quite back to its top form, but so I may be going through the central nervous system recycling sort of supercompensation thing. So I think that given all of that, basically that was a big long thing to say. I don't think I'm going to take a live trade today, but I will potentially look at some sim trades to test myself. But I'm a little bit weary. I'm not normal today for some reason. Play PlayStation. Well, we can go do some reaction tests, but let's look at the charts, okay? Because we did have some interesting stuff going on yesterday. All right. So first of all, in ZN, okay, we moved up. Yeah, we moved up. They really liked that CPI report. I took a trade somewhere around here-ish, right? That was actually a really great trade. Like if we had held on to that, you know, I of course ended it because end of my session and everything, but there was another two shifts up. So basically went higher and are higher today, but now we got CPI coming in. Oh, by the way, what is the CPI number here? The CPI number is, or sorry, not the CPI, the continuing jobless claims. Oh, we got housing numbers too. Okay. Initial jobless claims was in line. Housing starts was lower than expected, 1.36 versus 1.42. U.S. Philly Fed Business Index is lower than expected, 4.5 versus 8. Ooh, U.S. import prices month over month, spot 9 versus spot 3. That is a big shift. Excuse me. That is, see, it must be, I might have allergies here. I'm sneezing. That U.S. import prices, that is not a number that misses by that much. That spot 9 versus spot 3, that is significant. Housing starts changed month over month, 5.7 versus 7.6. Export prices 5, spot 5 versus spot 2. So all of those things that I'm looking at are in line or weaker than expected, except for the import prices. That must be why the treasuries are down. That is so curious. But, you know, we're still above the levels that we were trading yesterday. All right. S&P 500 really, really liked that. Oh, man. They didn't quite make a new high, though, did they? Not quite. Oh, they're right there. They're right there. So, pretty good chance today, if they have an update, that the S&P 500 will close at new highs. Oil, you know, kind of recovered its downside and moved up. You know, I think that when those numbers first came out, there was kind of this sense that like, oh, wow, we need to be careful here because the economy is really slowing down. But then as time went on, you know, I think that kind of moderated and the market realized that, well, you know, it's a slowdown, but it's not that big of a deal, you know. Gold and silver doing okay off of that from yesterday. Kappa. Okay, so I've been hearing some reports like from Goldman that copper is like, you could possibly just like completely pop off and do crazy things like cocoa was doing. So it looks really good, but over the last few days we're starting to get some really high volatility there. And when I start to see high volatility like that, I'm usually thinking like there's going to be a shift, right? So maybe copper might pop off here a little bit. So that, or we're about to be in for a wild ride. I mean, look at that, $5 in copper. This is just crazy numbers. Okay, and then we got the Japanese yen. Actually, a big move overnight relative to yesterday in the Japanese yen, and the dollar got kicked down hard. Oh, that's really interesting. The currencies were really interesting. You got to keep in mind that when I come in here, I've been doing all this reading, so I kind of have an idea of what all of the assets have been doing overnight. But this is the first time that I'm looking at a chart for the day. I just found that all extremely interesting, the way that the currencies have gone. What's this, AI to AGI? Dude, have you guys seen this ChatGPT 4.0 stuff? Oh my goodness. So, you know, I've been doing a lot of, I'm kind of putting together maybe a little presentation on kind of like how to do machine learning and stuff at work. So the interesting thing to note about all of this machine learning stuff that's going on is that the issue that you get is like you have this model that you want to use, and in order to use it you have to have data. And so the whole challenge is, how do you get data into that model? For instance, if I'm using you know, a large language model and I want it to do something like you know, you have a ticketing system at work and you want it to know everything about your ticketing system at work. Okay, so every night you go and you export all of your tickets and you input it into this system, right? And then what happens if you, in the morning, you know, everybody changes all their tickets in the morning and then somebody asks it a question after everybody's changed all the tickets? Well, then the stuff that the model knows is out of date, right? So those are the challenges that you have. It's like, okay, so when do I export the data and put it into the model and train the model on the new data and do all of these things, right? The challenge in the artificial intelligence world is managing the data. That's the hard part. Okay, like the models, coming up with the models, that's crazy hard, but people have already done that. Okay, using it and everything, there are challenges with that, but it is nothing compared to the problem of getting the data into the model. Okay. Well, one of the cool things about ChatGPT is that it just reads everything. Like normally, if I'm doing a machine learning thing on market data, and I'm doing some of the models that we know kind of work well on financial data. I'm gonna make my chair be able to lean back here a little bit. That too far? I don't know. Anyways. If I want to do market data, then I have to do all of the work to, export that data out, transform it, and get it into a form that my Python code can read. But with ChatGPT, I can just export it to a file and stick it in, right? And I have my own custom GPT. And I can talk to the GPT and it can kind of factor in and remember what we're talking about, which is super crazy, okay? So that is why ChatGPT was such a huge leap forward, is that it was the first time where we could take these artificial intelligence programs and just plug and play it, and anybody can do it. Because before that, it was lots of work to get it to work, right? Okay. Well, now all of a sudden they're making another huge leap because they had this, I was doing this thing where it was okay, what if I had the AI read, listen to what I'm saying and translate it all into text, and then I take that text and I pass it into another AI and see what it does with that, right? Well, the guys over at OpenAI were let's not even, let's eliminate all those steps. Let's just take one AI that just takes everything that you're doing and factors it in. So it's not just reading what you say. It's reading the tone of your voice and your mood and what you look like. It sees you. So now this model is factoring in everything that you do, just like a real person does when you're talking to a real person, and then judges your reaction to see whether you liked what it said or not. So now all of a sudden you have this AI that's practically flirting with you. It's insane. So if you haven't watched the videos for ChatGPT 4.0, and when I say O, the letter O, okay, go and watch them. It is freaky, okay? It's super cool. It looks super fun, but the implications of this all of a sudden start to be oh, whoa, hold up. I think it's kind of funny because when I first saw this, when I first started to see some of this shifting, I kind of started to think, well, I think that a lot of some of these white collar jobs that you have out there might disappear, But one place, where would be a place where, you wouldn't see the robots? Well, I think that there would be some places where, you would want a real person. You want to be interacting with a real person and so forth, right? I'm starting to think it's the opposite. When I use ChatGPT for coding and stuff, man, so far that stuff has been more of a hindrance than help for me. If I'm writing an application from scratch, then that sort of thing can be super useful because it gives you some boilerplate code, and then you can kind of fix all of its problems and you can get something up and going really, really quickly. But when you're working with an older code base and there's some sort of really specific performance problem or bug going on that's hard to figure, the AI does not figure that stuff out because it doesn't actually think, right? It's just remixing content that's already out there based on a reinforcement model, right? Meanwhile, this AI 4.0, watching the reactions, obviously it's not perfect, but within 5 to 10 years, I think that people would rather talk to the AI than to real people. Because you've got this thing that like its reinforcement is your behavior. Normal people, they have their own motivations and things like that, right? This is an AI that like the whole thing has been optimized towards getting the best reaction out of you, toward making you the most happy, entertaining you the most. And so I actually think that like when it comes to like customer service and things like that, there's going to be a point where people will rather talk to the AI. Isn't that wild? This is just wild. So I don't know where it goes from there. You do commercial music and the AI is starting to sound incredible. Yes, I have seen that. So I've been thinking about that one too, because okay, the AI coming in and you can make music with an AI and it can sound incredible and all of these sorts of things. Like, what does that do for regular artists? Does that kind of kill the music industry, sort of a thing? But you know what? I kind of feel like we already killed the music industry. Like, most people, they're out there, they make music, they don't make money from it. Because of Spotify, anybody can go out there and put music out there. It's potential that for you to make big money from it if you are one of the very, very few standouts that just goes absolutely viral and everything, and then you get enough plays that you can make some serious money with it. But by and large, most people don't make money. And so if you can make the music with AI, does that change that situation at all? I'm not sure it does. I don't think that's going to increase the amount of competitive content out of there, because we're already so saturated that, like, live music will still have life. Maybe. Yeah, maybe that's a good point. Yeah, but that just kind of gets me on this whole thought about, okay, so people are like, what do we do when the AIs take all of our jobs? Well, I think that what happens, number one, is that a lot of things get much cheaper, just like in the way that music has, right? It used to be that you had to pay like $20 for a CD to go and listen, and it was the big deal when the new CD came out, and then you could listen to the new CD. And now you can go and you can listen to practically any song ever invented anytime that you want for free. Right? And so you're going to start to see that degree of commoditization for a lot of different things. Right? Right now, if I want like a portrait of myself, that's going to be tens of thousands of dollars from a good artist. But I can kind of get something kind of made up for me from the AI for dirt cheap. Right? There's going to be a lot of services that become cheaper. And at some point, we're going to see, I think here's what I think is going to be the next big step. I'm already kind of seeing it. I'm not quite sure what the leap there is that they need to make. But essentially what I think you're going to see is these kind of large language GPT models applied to a walking robot. Right. Once you have robots that move around that can function at that level, you can create things like a robot home building workforce. Okay. Oil is scary today. It is like going up, man, for sure. Once we get to the point where we have like robot workforces that can build houses, it will be paradise. I think it will be paradise. Everybody's scared about it. But my reading of history is that these things always just make people's lives better. And it just makes things cheaper. Can you imagine if houses, if the average house cost like $50,000 instead of $1 million? That's the world that I think we're moving towards. And it could happen in the next 10 years. Lego based. Matt, I'm not too into some of these like modular attempts. They all kind of have problems, especially the cement ones. Oh my gosh. Those like 3D printed cement houses. Screw that. Nobody wants to live in a cement house. But I'm talking about, it's still going to be wooden sheetrock. It was put up by a robot. Like robots that can kind of make somewhat custom layouts and stuff in the custom location and all that. It's going to happen. It's going to happen. And at that point, the only real like barrier to making anything cheap is the cost of the materials, because the labor will be so cheap. There will still be things for humans to do, but maybe it will be that you compete with robots at some point. And I do think that it will kind of, a lot of it will be like, everybody will just kind of be scraping, doing entrepreneurial things and odd jobs here and there to try and make money. And you're able to scrape by because everything's just so dirt cheap that it's okay. That it's okay that it's like that. Hey, how have you been doing? I remember that name. I don't remember anything about you, but I definitely recognize that name. It has been a long time. I'm so happy to see you again. But and I'm so what is the word? You can see I'm just not 100% there this morning, I don't think. I'm so flattered that you thought of me. I'm your favorite DX. Oh yeah, that's. Well, the dollar has been moving this morning, hasn't it? Look at that. Need to zoom out a little bit. You know what? While I've been yapping here, the treasuries have been doing some interesting things. Okay, like there's pretty decent liquidity out there. I've been seeing like these kind of big ticks too. So kind of just judging from the way that my trade went yesterday, I think this is a little bit of an area that you got to be careful about. There could be excursion both sides of you here. There does appear to be a little bit of fight here though. I'd like to support when I see interesting persons in such a wicked world. Oh, well, thank you. Anyways, what had started that whole AI thing? It was something Captain Price said. Okay, but while I was talking, you guys made a bunch of comments that I missed because Sean was saying some stuff here. Have you looked at temporal diffusion transformers? Basically, the vectorization of time series data. Also, Amazon's auto gluon and assembling of various models, including temporal fusion transformer. Oh, that's interesting. So when we use the word transformer, I think what they mean is like in a neural network, you create these nodes, and these nodes can do computations, right? And a lot of what's going on in some of these AI models is the node is trying different types of calculations. It's changing itself. It's saying, what if I'm an exponential? What if I'm a this? What if I'm a that? And also changing like the weighting of that node and until it gets the output that you want, essentially. So when he says that, that sounds to me like that's basically like some way of taking a bunch of time series data and just turning it into one, direction and magnitude value. I could see how that would be useful. I could see how that would be useful. Let's see here. I was just focusing trading and used some new available accounts on TopStep. The next days I switched back to Apex and Ninja because of their 90% off. Oh, they're always doing stuff. I tell you, when I go back on the Reddit and everything, it's really wild to me to see how I was so wrong about this, guys. I was so wrong about this. I thought when the micro ES came out, I was like, well, this really destroys a lot of the reason to use a funded account. And then we got even cheaper things. Now you've got micro everything. Okay, there's micro gold, there's micro oil, there's micro treasury yield futures, there's micro treasury futures, there's micro ES. So now there really is the option for you to trade the size that you want pretty much everywhere. And yet combines are more popular than ever. The exact opposite result that I thought. So I was dead wrong about that one. It's very important to look back and think about, see the things where you thought something and you were wrong about it. Because we have a tendency to forget those things. Only remember when we were right. Kind of thinking, how do I feel about this spot? It does look like there's maybe a little bit of a liquidity hole formed here between 21 and 20 half. I do think that there is, it's pretty thick today. Like there's these 5,000s down in here. It is a Thursday. You know, let's go and do our notes. That's what we need to do. I misspelled template. Okay. So we had initial jobless claims in line, housing data in line / slightly hot. Import prices hot. Thursdays tend to be active. Thick liquidity. Do we have later today some speakers? Yes, we do. Okay. Lots of Fed speakers and 4-week bill auctions. So when I look at all of that, expecting activity, but could be mixed / down. It seems to me that the housing data, or sorry, the import prices being hot kind of gives things a downward tilt. But I think I should expect these flows to be a little bit mixed. Okay, so while I was doing that, we moved up 2 ticks on not a lot of volume either, by the way. Okay, so what does that give all for me? I can see where what's going on in the DOM is kind of, you know, like tingling my trader sense here. Like, okay, some stuff's going on. But I ultimately, I don't have a large bias, so I probably shouldn't be trying to take a big trade. If I did take a trade, it would maybe be a good spot to try and take a tick, because there's going to be activity around here, but no clear directional bias from it. But you gotta be careful with those if you're not quite sure. Probably it would be better to sell. Maybe if you'd gotten filled at 21.5, you could have taken that 1 tick there, for instance. Okay, so that means I gotta sit on this. I'm not gonna take a live trade today because I do think something's off with me. Can you even, I don't know, do I seem like the way that I'm talking today seem different to you at all? Let's go to the human trend part. Yeah, there's definitely something up with me. I thought that I was slow there and I was below 200. I have never done that before. I think that I maybe anticipated that one a little bit, but I have never gotten like a sub 100 milliseconds click. Okay, that one was like way bad. Okay, that one again, I thought that I was slow. It was 200. So I am definitely, my nervous system must be in supercompensation. So when that happens, my past experience has been that it makes me want to trade more. And I would even say it makes me a little bit more aggressive. So when that happens, I have to be cognizant of that and compensate for it. I think I might be able to compensate for it. But that would, part of the way that I would compensate for it is I really have to be sure that I think something's going on, right? If I don't have a really strong bias, then I don't think that I have a very good case to take a trade in this situation for me. But maybe for you, especially if you like to scalp these areas, it might be a good spot to scalp. That pattern that, you know, was kind of an interesting one. It's not typical to see it. Okay, we've formed, you can see it right there. We've kind of formed the liquidity hole, but then what's with this? That's, so there is a hole, but there seems to be a bit of fight in it. And you got to be careful with that sort of a thing, because that's, you know, like if it was a large meta order, it would just go, right? Now, this is more like some tactical kind of fight. Somebody's throwing their weight around for some reason. I don't like that. That usually doesn't turn out very well for them. And I don't think that I necessarily want to be playing with them, you know? Why? What? Well, oh my gosh, I got to read this story. I'm browsing now. I'm starting to go through some of my, you know, browsing things to see if there's any interesting news for us to look at. And sometimes it will just turn up kind of more general tech news that's just interesting rather than relevant to the markets. iPhone owners say the latest iOS update is resurfacing deleted nudes. So you took nude photos, you deleted it, and now you're finding out that that Apple kept it? That is nuts. That is insane. This guy says something similar happened to me a decade ago. I synced my Mac OS photos to iCloud after formatting my MacBook, and my dick came back to haunt me. It was a couple of pics I was sure were long gone from my phone and were always synced to that same iCloud photo library. So I think that makes total sense to me that, like, they actually, when you delete something from the iCloud, it just marks it as deleted and it doesn't actually delete it from their cloud. I can totally see them from a tech perspective doing it that way, but that ends up being like a huge breach of trust. Guys, don't put stuff that you don't want out there on the internet. Like, you know, it's absolutely just bonkers to me that kids will take nude photos and send them to each other and things like that. That is so, don't do that, guys. It's so stupid. It's there forever. Even if you think you trust the person, you know that they didn't send it to other people, Apple still has it. Just don't do it. I would extend that to larger to other things, you know, like you know, there are some private conversations that you should just have in private and not over text, for instance. Who knows? Maybe someday that will become relevant to you. I hope it doesn't, but maybe someday that'll be relevant to you. In a world of porn addictions and taking nudes, whining about other people seeing your dick is a bitch move. Okay, I guess if you're okay with other people. But my policy is you just don't even mess with that. You just don't even you don't even take the picture. Don't even take the picture. Let's see here. So let's read the story. From The Verge, Apple appears to have a bug that's dredging up data that iPhone owners thought was gone. Some iPhone owners are reporting that after updating their phones to iOS 17.5, their deleted photos, some quite old, are popping up again, according to a Reddit thread that MacRumors spotted iOS beta testers had the same complaints about the bug last week. People reporting the apparent bug say they're seeing old photos appear in their recent albums after Monday's update. iOS does give users the option to restore deleted photos, but after 30 days, they're supposed to be permanently removed. The person who started the thread claimed that the not safe for work photos they had deleted years ago were back on their phone. Another Reddit user said they saw photos from 2016 show up as new images, but that they didn't think they'd ever actually deleted them. And a person claimed in a later post that around 300 of their old pictures, some of which were revealing, appeared on an iPad they had wiped per Apple's guidelines and sold to a friend. Oh my gosh. Oh my gosh. Okay, so you have an iPad, you take risky photos with the iPad, then you delete the photos, you wipe that iPad, and you sell it to somebody else, and then the photos show up back on the device? Oh my gosh. Oh my gosh. There is no way. That is like such a so at work we have like priority issues, right? So like there's a P2 and a P1, and like based on their priority, it's like, you know, it needs to be fixed before the end of the day. Okay, and then they realized, okay, actually we need a P0. So they made the 0, and the 0 is we do whatever it is to fix it as quickly as possible, right? This is like a P -100. Like, I just can't even. It shows up on a device that you've given to somebody else. Maybe that person is lying. That's one person. If that is like a widespread thing, oh my gosh. You can recover all deleted pictures from such phones that you buy in the same way, even if they factory well, yeah, because if it's in the cloud, sure. That's so crazy, man. Yep. This could be more innocent than it sounds. Computer data is never actually deleted. That's exactly what I was saying. Operating systems simply cut off references to it. One user also said they saw a photo return even though they don't sync their iPhone or iCloud, implying the photos could be originating from an on-storage device. Oh, okay. So actually they're saying something different from what I was saying. I was saying that, you know, what they do is, you know, they still keep the file on the cloud, but they just mark it as deleted. And then you're never supposed to ever be able to recover it if it's been more than 30 days or something like that. But maybe they still keep it. But these guys are saying, well, maybe it's on a section of your storage that, you know, that it was marked as free, but they haven't actually written something else on top of it, and so it's still able to come back. I don't see how that would happen though, because you wouldn't know. You would have like this section of memory. Number one, how would that section of memory after something back to 2016 had not been written in that long of a time period? There's no way. There's no effing way. And number two, like how would it show up as a file? Because like there's going to be data in there, but you don't, the computer doesn't know where it starts and things like that. So what they're saying, I think, I can kind of see where they're going with it, but I think that it'd have to be a little, unlikely. There have to be more to it than that. I think that some sort of a cloud situation is more likely. There's a chance it's not specific to photos either, as one person posted on X that they saw old voicemails come back. Whether the issue implies Apple is secretly holding on to deleted data or is just a quirk of how iOS 17.5 handles data, it's not an ideal situation. Nobody wants their deleted news. That seems like a big scandal to me. But I also this kind of seems to me to be like something that everybody forgets about and gets buried. Okay, some of the comments in this thread are funny. Most people get unsolicited dick pics from someone else. And then this guy replies, I did it to myself and felt disgusted. Oh my gosh. The iPhone apparently does lots of things without your permissions, yes. Okay, so you know what? Something else that's going on with me is I was not able to take my gut medication yesterday. So I'm a little surprised that I'm like so fast and everything, because I should be feeling really icky. And I did kind of oversleep, right? Oh, that's weird. I do feel somewhat chatty. But if I'm right about what's going on, what probably we will see me do is I'll burn out quickly. So we'll see. I could get quiet later and just feel tired. And by the way, a lot of volume is traded at 20.5 now, 50,000 contracts. Like since that little bit of fight and everything, and now it's just been stuck there. So oh, it actually ticked down. Let's see, do they continue the downtrend or does it snap back to 20.5? Well, it has been, I'd say it's probably been long enough for them to make another move. I don't know if they will, though. Oil is still popping off, by the way. Oil's the biggest mover right now, for sure. So, another thing that we could do is we could try testing my typing speed. Okay, so at points I thought that I was going super, super fast. Actually, there was some points that I was going super, super fast. I was getting up to 120 at points, but overall my raw was 103. So that's about where I usually am at. But maybe I'm just warming up, huh? Let's try it again. Yeah, that was terrible. So that time I made so many mistakes that my WPM will get... So it penalizes you for mistakes. So my raw was 105, but my WPM was 88. There was points where I'm getting up to raw 130. Hello. Good morning. Have you been here before? That name seems familiar. You're from Italy, though, and I went out school now? Okay. Try that again, because I don't understand what you're saying. Okay, I think that's some more evidence that I'm, like, super compensating. I'm going to change some settings here and go to, where is it? Tape mode. Word. Okay, let's try it. Yeah. Lots of mistakes, but raw 110. I'm twitchy today, guys. This makes me think about this. Okay, so like with esports, I want to own an esports team and make them do Olympic weightlifting and set them to peak when they have their competition, because it seems to me that the things that we do to prime the nervous system for a competition increases reflexes and would probably make you faster at games, esports like Counter-Strike, for instance. Slow. That was way slow. Better. Okay, that one I felt like I was on 159. That's crazy to me that a score like, oh, actually, you know what? The way that it must be doing the stats must be. Eh. I think I'm going into that mode, but that I'm still a little bit weak and iffy today. Look, they did get sucked back up into that 20 half, and now it actually kind of looks like they're probing the other direction now. Huh. Gold is still right. Why is gold moving like this? Did I miss something? Let's see here. Okay. Let's look at that one. You want to look at that one? You don't have to know. Which stock do you think should have gotten halted that wasn't? Which one? Which one? So we'll go to Trading View, my current chart here. I made a video about this on TikTok the other day if you want to go back and look at that. But basically, I got some indicators on here that can kind of help you identify when it gets halted. So every time that there's a triangle there, that's a place where it got halted. Okay. And then this indicator down here at the bottom is showing you the percent change per bar. So you can kind of see some of these places where it's going to go over the 5%. It has to be between bars. Okay, so let's just start with the first one, SINT. Okay, and we're talking about yesterday. So, SINT. Okay, so this one is different. Yeah. Okay, so circuit breaker rules. Nicey. Is that it? That's not it. this is okay. This will give us a good enough thing. So GameStop, because it is worth $60, is considered a level 1. No, that's not right either, because it's 5%. Oh, it's right here. 5%. That's an overall. There's the limit up, limit down. Okay. These price bands are 5, 10, and 20%, depending on whether the stock is designated a tier 1 or a tier 2. Okay. So tier 1 is, oh, come on. Tier 2 stocks at or below $3. Okay. So this one, because it is a tier 2 stock or whatever, so it will have, its price bands are probably going to be 20%. And since we never had a 20% move, that's why that one didn't go. Okay. FFIE is the same thing. It's a penny stock. Now that one doesn't even pull up for me. DDTG. Okay, so yeah. So the reason that those ones didn't get halted when GameStop was is because GameStop is worth, $30 essentially. By the way, where are they? Oh man, they're coming down quite a bit from yesterday, aren't they? Yes, sir. Now we know, right? It's kind of, isn't it fun to actually understand the rules and know why things are happening instead of just jumping to conspiracy theories? That page that I was reading did not have the best rules. There's definitely a better page somewhere. Maybe it's this page right here. Here we go. Limit up, limit down. Okay. The percentage is determined by the security designation as a tier 1 or a tier 2 security. Tier 1 comprises all securities in the S&P 500, Russell 100, and select traded products. Tier 2 comprises all NMS securities except for rights and warrants, which are specifically excluded from coverage. And there's a plan right here. Overview. Calculation of price bands. This is what I'm looking for. The SIPs calculate the upper and lower price bands by applying a formula to a reference price, which is the arithmetic mean of eligible reported transactions over the prior 5-minute period. The first reference price of the day is either the primary market's open price or the primary market's previous day closing price. If no eligible trades occurred in the prior 5 minutes, the previous reference price remains in effect. Reference price is updated after 30 seconds only if a new reference price would be at least 1% away from the current reference price. So it's kind of complicated. There's a couple of rules. We could definitely write this. If I got single stock data in NinjaTrader, then I would totally write it. You could write it in a trading view, but you'd have to have a paid account, because in order to do things like VWAP and do like for each order sort of logic, you have to have paid version of TradingView. But what you would want to do is it would be a lot like a VWAP, but it's transactions instead. As for each order, add the price, and then keep a counter for the number of orders, and then at the end divide that total sum by the number of orders, and that's your reference price. Okay. And then for tier 1 securities, if we are above $3, then the percentage parameter is 5%. If it's between 75 cents and $3, then the percentage parameter is 20%, which was in the case for those ones that we were just looking at, I believe. Right? And then there's these tier 2 securities, which are greater than $3, but they're not in the S&P 500 and whatnot. And then those are the ones that are 10%. Close this up. It looks like GameStop is selling off here this morning, though. So this is kind of what I was saying yesterday, right? Is I was, the way that it was going, it kind of looked like that they were not going to be able to hold the 34 by the Friday. And hopefully those options traders that were making bundles of money from it took their profits. This right here. Limit up, limit down plan. Oh, here's the rules. That's funny that they have like a whole website for it. Minimize that. I don't know, it does kind of look to me like a downtrend, but the volume didn't really, I don't know. There was like 2 bars in there where it kind of went down and it wasn't that much. So I don't know if I should really be reading too much into that, although it sure seems like trend down. You want to short it to 16? Well, okay. So, I don't know why every time that you talk Octavius, I start thinking about the cost basis thing again. I guess we did have a move down because of all of the data releases and everything. But I would say that this seems like a slightly different situation than what we've been looking at. So in the past, we've been looking, okay, will there be a pullback to the cost basis, which would be all the way up at 22.5? Because right now that seems kind of silly that it would do that, don't you think? Of course, there is the downside, which is at 17. So for them to get to 16, as they move down, that number will probably move down. So it's possible. I think it's a reasonable target, but it will be, they will have to stretch a little bit to get that. But let's see if there's actually a large meta order sell in there. There is in the 5-year. Oh, holy crap. Holy crap. Look at that. Look at that. Just as soon as I'm saying that, it's like then all of a sudden 6,000 contracts just pukes out in the 5-year and everything's a tick lower. Oh, wow. I was not expecting that. That's got me really thinking now. Could that be endogenous? So I'm not seeing anything in the spreads. That was like 8,000 contracts sold in the 5-year. That's really weird. I think it could be endogenous. I think that moving that move could just have been like a stop run or something like that. The bias is definitely downside. Had that right. Kind of makes me go like, though, is there a meta order out there that I should be aware of that I should be able to guess is there and I'm missing it? Could be too. Could be that too. But right now I'm leaning towards that was just endogenous. You know, they messed around in this area for a while. There was some fight. There were some people getting involved in there, and so when it broke out, then some of these people are puking. That could be endogenous. Or that would be the endogenous scenario. Random. I guess part of the reason why I'm still like, though, is because oil is taking off here. I'm not seeing, so seeing oil move up, my first thought is, okay, has there been some development in Israel, for instance? But if there was a development in Israel, I would expect to be seeing the treasuries moving up as well. Instead, it's more like oil moves up and treasuries move down because we're concerned about inflation, especially with those import prices being so high. And it could well be. Oh, by the way. So here's a great situation for us to look at with our cost basis indicator, because we are coming into the stop out zone. We did trade the stop out zone. So theoretically, it shouldn't be able to stay below this price for very long. It's not, if there's somebody out there and they're going to sell a ton, then of course they're going to move it. So don't think of it as like a hard line, but it's going to be hard for them to do that because the market makers are like losing money hand over fist at that point. Uzi says, in fact, that the 35 and 2 are all below the stop out line. Interesting. So, do we get a bounce here? Is the question. I think that 16 is still they could get that. They could get that. But that was maybe a little bit too fast. Yeah, they're all like approaching extreme imbalances too. Define extreme, like greater than 60%. Yeah, okay, 10 is still surprisingly in the mid zone. That's, because like my recollection is that 60 was a pretty big, approaching 30. Yeah, that is a really big imbalance. Why? Yeah, see, that seems a little bit too extreme given the current situation, don't you think? Because basically what I'm saying is right now, I don't see a fundamental reason for us to be going down. Or let's not say a fundamental reason. I do not have any kind of predicted flow that was expecting a large imbalance to the sell side. The only thing that I see is the import prices being so high. So if this move down was endogenous, presumably some of those sorts of technicals and the levels at which the market makers are working with and so forth would be more important in this situation. And ergo, we would be more likely to see a bounce here, right? I'm super nervous. Even with my sim account, I'm kind of sitting here like, I don't think I can trade against that. I don't think I can buy 18. You think I can buy 18 and make like 2 ticks off of that or something off of a bounce? That seems a little bit questionable of a trade, don't you think? $15,000 in ZT. Yeah. I'm telling you, okay, so like one of the reasons I don't have enough room on my screen, okay, but there's another thing about ZT, and that is ZT is completely different from all of the other instruments because it has a different fill algorithm that prioritizes people that are putting more liquidity out. So there is people are kind of encouraged to put a huge spoof out there because they're more likely to get a partial fill. Something that you might see happen is like, they put 15,000 out there or whatever. They only actually want 5. And so once they've gotten the 5 traded, then it disappears. Some guy put a big size on offer, a tick off of the low. Wait, that doesn't make sense to me, a tick off from the low. Oh, so like right on the best offer? That's kind of wild. Tell you what, right here. There's it's a little thick at 18.5. If that pulls, I'll try and take it. The imbalance on ZN is basically awesome. Okay, that seems about what because like the cumulative delta is not moving that much. We're at 93, and if we go all the way back to the open, it was 120. So 30K change overall, but like most of that was at the beginning, and then kind of this area that we've been paying attention to where we've fallen off, it's less than 10,000 contracts for us to move down. Yeah, I should come back over here and show. If we're looking at here was the last liquidity hole. So this is where we're getting the move from. And so I'm going to kind of put a line right there or so. So it's like from 110 to 93. Oh, I guess I'm reading that still 20K. 20K is a decent sized move. Actually, I would maybe expect it to move a little bit more than it has for 20K. Okay, but we are getting another one of these right here. This is interesting, actually. I'm not quite sure what to make of this on the DOM here, though. Because when we look at a spot like that, I'm expecting to see low latent liquidity at that price and them trading back and forth. We are seeing some signs of that. Okay. It has traded across that price several times. It's a little bit lighter there. It's a little bit shifty. Some of the offers will pull really quickly. But it's really thick above and below it. It's really thick. It's kind of decreased a little bit, but like you got a 6K down there. It's thick. So I don't know what to make of that. Well, actually, I think I do. I think that when I see a strong move and the liquidity increases, I start looking for a trend. So I think that it may take some time for them to rebalance here. But based on that, I would think that the next move would be further downside. But it seems awfully risky because, again, like on some of these other measures, we're kind of like careening down here, right? But maybe they rest here for long enough and those kind of imbalances kind of resolve themselves and then they're able to move lower. I guess we should also come and look at, like, what would be some of our downside benchmarks. Well, the only really big level I got below us is back to the single prints from yesterday at 13.5. So that's a good skip away. But it could happen, and then, well, it's already almost 8 o'clock too, by the way. We don't have anything. Oh, well, Fed's Barkin. Okay, yeah. So at the top of the hour here, we're going to have Fed's Barkin speaking on CNBC. We will also have Fed's Bar speaking. And then 30 minutes after that, we'll have Harker. So we're about to get some Fed speakers here. That offer, you see, like, so now down tick, that offer looks thick. One lot into the next, into it, so they are kind of being squeezed to a new low. What do you think is going on, guys? I think he is. You know, I don't
Block
think
sell.
So like I'm not keeping track of them, but like of the trades that he's shared with us, I think that these had like 2 losers and 4 winners, and 2 or 3 of those winners were like really impressive. And kind of what's been happening is he's kind of just been finding that kind of ledge, and this is going in for breaking. It's actually kind of funny because he's going for like exactly the sorts of spots where I always would love to get in and kind of got burned so many times that I've become shy about them. Right? Because I'm always about, we're right at the low. Okay, it's going to bust. I want to sell it right there. And then it reverses on me. Like, oh, crap. Dang it. Right? Not quite to 16, though. So I'm kind of... That maybe his balls are bigger than mine. I don't know. It might just be the market period. Right? But I guess the whole thing that was happening there was that like it came down so quickly that I was kind of like, I might take them a while to get to 16. It might be a little bit of a stretch for them to quite touch that. And when I get a slip like that, I like to take profits, right? Unless I have something that suggests that there's still a really strong imbalance and I haven't seen the amount of volume come out that I would like. You know what, though? So here's another thing is, if I had traded this in micros, well, there's like from the highs and everything. It seems to me, I remember it being, well, maybe it wasn't at 36. It must have been in this 3.5 area because that's where the volume profile is at. So this 3.5 area must be where that liquidity hole was. So that was a $15 move in the micros. Doesn't that seem a little light for as strong as that move seemed? So I think that I am actually making a big deal out of relatively mild magnitude moves. I mean, there was some volume in that. There was definitely like cool to watch, but it was actually only like 4 ticks. So I don't know. That just brings me back to the, I think I'm twitchy today, right? So like, oh, okay, there was a move down and it was 4 ticks and I'm like, oh, that's a big deal. Oh, I wish I'd been in on that. But actually that's just like average noise in this instrument. Obviously, the volume and the speed with that was not noise, but the number of ticks that it moved, it was just the standard. Now, that said, I'm still seeing the DOM kind of doing stuff like that. They're not done playing around here. Even though they're stuck. Even though they're stuck at 17.5. Definitely acting like there's some big traders that aren't done playing. Oh gosh, as soon as I say that, it dies out. Yeah. Oh, that's really weird. So, okay, there's a good down tank. Something I find interesting about this move too. It really feels like the 5-year has been leading it, but I'm not seeing the spread move. I'm not seeing the spread move, but it was definitely like you can see it when you come back over to here and we look at the cumulative deltas, like especially that puke right there in the 5-year. Like it was the 5-year that kind of was like pushing it. It has a really consistent down. I don't know. One thing I'm thinking here is like, okay, that is enough for me to trade. I can take a trade based on that. So why am I not? Why didn't I do it? Well, they did come in and say like, I won't take a live trade, but maybe I can take a sim trade. Now I feel like that it's overdone. It's not touching that 18.5, so I don't know if that one's such a good trade anymore. I don't know. Maybe. So like yesterday when I started to see it, because I did have an expectation of the imbalance and everything, you know, that's like a key thing that's often missing, right? Like I'm coming in here, I'm expecting activity could be mixed / down. And instead what we're seeing is excessively imbalanced down. So that's not in line with my expectations. So it's a good thing that I haven't taken a trade. But there's definitely enough autocorrelation for me to have done something. Like the technical side of it is definitely there. We want to use that kind of terminology. I don't like using technical, fundamental, yada yada, but you get what I mean. You get what you old timers get what I mean. Yeah, money made using technicals is basically losing money. Well, so when you come into my approach, okay, so I come in and I say, here's the imbalance that I want to see, and then if I start to see that imbalance, then I'll take a trade, right? And if I'm seeing volume that's not in line with my expectation, then I kind of leave it out, okay? But like the real edge in there is that we're looking for a large meta order. And so we're looking for a situation where you're going to see an imbalance, like you're going to see more market sells than market buys. And because it's a large meta order, that guy is going to be executing it all day or whatever. And so it can just kind of continue to slip and go, right? So why don't I just rely on that I'm seeing that autocorrelation? I have some sort of technical set of things to say that, you know, this is a large meta order and I can jump on board and it will keep going. Well, the reason is because I have found that by the time it is clear to me that autocorrelation is kind of coming in, that the move has already happened, right? But we've definitely seen a number of cases as of late where they're kind of on an edge. You can kind of see that imbalance, and then it does end up playing out below, and I could have made money from it. So now ZN is approaching an extreme too, huh? Well, there's an iceberg at 17. This probably caused that. So this was one thing that I've always kind of been a little iffy with from those indicators, by the way, is like, okay, like there are situations where they're just selling it really hard and it creates a huge imbalance. But there's also situations where like that imbalance represents an iceberg somewhere, right? And that seems like what's happening right now. But I'm seeing icebergs on both sides, so... In fact, actually, the cumulative delta, this is actually one of the most significant one bar rises in cumulative delta that we've had in a while. So, I don't know. What's that? Did I send a blank message? No, I see 30, crawling to 30, but not moving down, and then you saying, what's that? So I don't see that you sent a blank message. It's weird. On my end, the crawling to 30 is blank. Uptick. Maybe I will put that back. Weird. Okay, so after that uptick, I'm seeing a little bit of an uptick in level 2 activity again. I know, this is where it's like, okay, so I probably could have taken a trade from 20 down here. But now that it's down here, it's like, should I be taking a short somewhere in this area? I think no way. I think that like the real move is past for me. There might be an opportunity for me. It pulls back. It pulls back and goes lower later. But I don't think I want to take a trade like within this 17 to 18 range. Maybe this big order pulls and I get a tick. We'll see. I kind of suspect that if they trade 18.5, that my stop limit will get triggered but not filled. So let's see what happens. Kind of looks like that every tick is going to be tons of volume from here. But that again kind of supports the continued downtrend scenario, so. Okay, so now another thing that might happen when I'm twitchy is that I will over intellectualize everything. Oh, look at that. It did not fill it. Did I call that one or what? I can't believe that only 1431 traded there. What a crock of bullcrap. Oh my gosh. Well, I got a good spot in line. There's still a good chance that I get filled. Okay. Let's see how this goes. This is a little dangerous, I think. I'll put the stop here. So now that everybody knows where it is, you can come and try and fight over whether I get filled or stopped out. Go for it. Let's see. I don't know if you'd want to play those kinds of shenanigans right now, though, with the market so thick. But I don't like 3,000 contracts burying me. No. Oh, that 3368. Oh my gosh, this could not have gone worse for me. Oh, and Bar is speaking. I forgot about that. 8-Ball thinks you think I could still. Well, I mean, it was only one tick down. I could still get filled. I could still get filled. I think I have a theory that there is a consistent market behavior, like sitting here staring me in the face, and like when I discover it, I'll be like, oh, how was I so stupid? Like all of these things, because the number of times where it seems like I get filled and then there's never a favorable tick for me. You know, like that just happens way too often. And so that's where I'm like, there's got to be something that's like telling me that like that is a really bad spot to actually get in. And I'm just not realizing it, you know? But I can't imagine what it actually would be. Okay, well, they didn't stop me. They ticked back up. I don't know. I think that if I get filled there, this is going to be mostly like... I mean, I am holding technically a 2-tick stop and a 1-tick target. So, like... I can't really congratulate myself too much if this actually fills. Because if it was 1-to-1, I would have stopped out. If it was 1-to-1, I would have stopped out. It kind of looks like it wants to tick back up, but they're not quite doing it. How about this? Let's make this fair. Let's make this 1-to-1, and I have to get 2 ticks up, okay? Then I feel a little bit better about myself, because if I take the 1 tick, then I'm just, you know, that's just degenerate crap, right? So we're gonna go for 2 tick stop, 2 tick target. All right. No way. Wait, what? Okay, so the headline is CME plans to launch spot Bitcoin trading. The Chicago Mercantile Exchange is planning to offer a spot Bitcoin trading on its platform. This move would provide major hedge funds and institutional traders with a regulated venue to trade Bitcoin. CME is already the leader in Bitcoin futures trading. By adding a spot Bitcoin, it can offer clients an integrated platform that includes both spot and derivatives markets. This enables complex trading strategies like arbitrage and basis trading that leverage price differences between the two. Currently, most spot Bitcoin trading occurs on offshore exchanges like Binance. Yeah. Dude, I mean, I don't like Bitcoin, so I don't like to see that, but like that's kind of actually like super crazy big news, isn't it? I don't know if that one like increases the amount of money that can flow into Bitcoin and everything, but it could change the Bitcoin. It definitely makes the Bitcoin market more mature. Come on. They're just not going to let me win. What if I changed it? What if I made it 3-3? No, let's not play that game. Just do it. End my misery. Well, they tried to clear the offer at 3,000 traded and then another 1,500 added. I am seeing... Actually, I kind of do want to give it more room because this does look like it's turning into a long. Look at this. Okay, so this is like as much... Well, look at it in the 5-year. Look at it in the 5-year. Yeah. I mean, that's as much as it took me to get into a trade yesterday. But that was because I was expecting that at some point you would start to see some more long. So, since I'm still kind of expecting mixed, I don't think that should justify a trade. But, you know, the dreamer in me is like, yeah, swing this long, man. This is right. Okay, I tell you what. If this continues to move up, like, and we touch 22, well, maybe it's going to be more like 21, something like that. Okay, before any new low is made, that would be real freaky. That would be like, hey, Seth, you need to just, you know, not worry about back testing it and just go back and start training that robot. Yeah? I don't know. What do you guys think? If it does that, what do you think I should do? Is that just the luck of the draw, or should that be enough to convince me that there's something to that? I don't know. Because, like, well, it's the combination of it, really, right? It was we hit the stop out zone on the cost basis, and we saw imbalance on our market volume imbalance window, right? It kind of says take the reversal. So if that actually worked, I'm a little bit. Of course, I think that that's the only time where we've actually seen that situation, you know, like actually watched it live, but yeah, I don't know. You've seen it a few times. I think there's still kind of this thing where, like, if we're really in a trend down day, that's going to happen, and it's like a really bad trade, right? Yeah, maybe I actually do get filled, man. Part of me, you know what? I feel so torn about this sort of a thing. Because part of me wants to celebrate, hey, actually, I did get the winner after all that. Part of me wants to say that it's just luck. But then part of me is like, why do you want to downplay your accomplishments so much, Seth? Like, you totally saw the turn in volume there. You totally called it. And even though we're talking like really tight here, so there is definitely, oh, come on, just stop. You know what? I am so done. I can't even believe that. They're watching the market, somebody at Goldman Sachs that's market making in the treasuries is listening to me and is like, I don't think that I'm going to fill you yet, Seth. I can't believe that. That was weird. I mean, we saw a trade like that on the way down. Seeing it here is even more bizarre, isn't it? That is really weird. Well, I'm already in this and it's a sim order and it's kind of fun, so I'm gonna stick with it. But if I was trading that live, I think I would have just scratched that there, because that kind of freaks me out. Man. So what was I saying? Oh yeah. So like, here's the thing. That reversal trade. Okay, so we've got our buy sell market imbalance is too far out of whack, and we just went through like the stop out zone on the cost basis. And then we form a liquidity hole that is a place for a temporary pullback. Okay. Let's just say that that's the trade. Okay. Two questions that would be really important to making that trade work. Do squawk talking here. Question number one would be, when do you take profits? Perhaps we could use that market imbalance indicator as a when we take profits. Like when it comes back to even, we take it off or something like that. I actually kind of really like that. That's maybe a way of thinking about it. Okay, but then the other thing would be, how do we filter out trend days? Because I'm pretty sure, I don't think that we've seen one since I've given this to Uzi and he's been looking at it, but I'm pretty sure that when you get trend days, that what you will see, if we were to come back to this thing, when you see trend days, you will often see them just ride this line the whole time. And so then anything that is like any kind of reversal, you just get screwed every time. And the thing is that, you will see the imbalance will be really strong. You'll see it riding that line. And so it will trigger multiple times and you'll just lose every step of the way on a trend day and lose a lot. So we have to filter those days out. So how do you filter a downtrend like that? Well, you could say, if we're trending down on a large enough time frame chart and all of those sorts of things, but that is going to bring in a lot of days that aren't the trend days that you're trying to filter out. So I think that I can. Oh, you can't even see I'm drawing here. Right? That when it's a trend day, they just ride that line the whole way, right? So I think that there are some cases where I can kind of tell that it's possibly going to be a trend day. So I could maybe do it discretionarily, but doing it with a robot, I have no clue how I could do that. Yep. The imbalance indicator is basically rolling window percentage of the total orders that are buys. Market orders. Yeah. When the market is trending like down, waiting for imbalances above 50 in the 60 to 70 zone is good for entering. So when the market is trending down, a high percentage of buyers is a good place to take a. Oh well, yeah, you're proposing the opposite trade for sure, for sure. You're saying that if we're trending down, I'm looking for a pullback for me to get in on a short, and so if I get an imbalance, then I go short, and yada yada yada. Yes, like I tried back. That's what I tried back testing. Like basically I would take like a super smoother, right? And I'd say, well, let's pull it up. I'll show you the code. Because I don't remember exactly what I did, right? Did I add it over here? Did I like bring it over? No, this one's different. That's the squeeze one. So I didn't pull it over. Let me go grab it. It's in my little archive. I need to move things. So there's when you're doing Python development, there's something called Jupyter notebooks, which are basically kind of like this document. It's like a text document, like a markdown document, but you can actually put code in there and execute it and whatnot. And so what that allows you to do is to be like, okay, show other people, here's the data that I loaded, here's all of the different things that I tried, and here's like the end results. Because you're going to change it, right? You're going to change it and test a bunch of different things. And like, what did you all actually test, right? Hard to keep track of it, especially when you make, yeah, I got filled. So yay. Like I said, your indicator shows divergences and you're not going to like it. Oh, no, wait. I don't understand what you mean by that, Uzi. Try and explain that again. Anyways, what was I saying? Oh, yeah. So I wish I had something like that for NinjaTrader, because I know that I changed this indicator like a billion times trying to like find something that worked with this. Then custom strategies play. I should just grab all of these. Oh, wait. There we go. Okay. Price is going up, indicator is going down. Oh. That is weird. And yes, I don't like that. Yeah. How can that be, though? Because cumulative delta is rising. Is that in the 10-year that's happening? I don't know what you think about that. Because I'm not going to say, yeah, but what percentage of rising delta is buy orders? All of it. No, that doesn't make sense. You can't have a situation where cumulative delta is going up and this buy sell imbalance thing is down like that. That is making sense. Like if you're getting this, then this indicator should also be up here at the 70%. Because what that means, cumulative delta is just them adding on to each other, right? So if this bar is down, so if the buy sell imbalance thing is down on this bar, it is impossible for cumulative delta to be up on this bar. But what could happen is, you know, cumulative delta moved down and then is up a little bit, and this in the rolling window is still staying relatively high. That could happen. But like for them to like straight up diverge like that, it can't do that, because they're looking at essentially similar things. It's just like it's basically like the way that one way of thinking of it is it's cumulative delta with a rolling window instead of just adding on forever. Okay, sent a screenshot. Oh, no. Yeah, that's okay. So that's a little bit different. Yeah, this I'm more concerned about this spot right here, right? And this spot right here. Yeah. But what you're pointing out is that here, cumulative delta started to moderate a little bit. And you can see that what happened was there was too much of an imbalance. And so the short-term shift kind of had to move back more a little bit to even. Yeah, the window kind of moved more to even. I thought that you were saying something like, you know, cumulative delta is moving up and this indicator was like below 0.5 or something like that. That would make no sense. But you are kind of right that I don't like it necessarily, right? Like I want to see autocorrelation like this right here is a perfect example of what we like to see. It's just, okay, cumulative delta is down and this indicator is below 0.5. It's just a persistent imbalance. More market sells. I love it. Like as soon as I notice I need to sneeze, I pause there. Okay. So now we're definitely, you know, what I find interesting about this one though is this dichotomy here, like where if you have that line at 0.5, it was like, it's very persistently like it'll come back to 0.5 and then they'll sell it more, come back to 5.5 and then they'll sell it more. And now all of a sudden it's shifted and they're doing the opposite. That's kind of weird. Does that pattern happen a lot? Relative to price, every peak in the indicator was a solid entry. Well, so you're, yeah, but we're still talking. Okay, so here's where it gets iffy, right? I think the trade right now is long, right? I think the trade right now is long. So this right here was a great entry. This right here was a great entry. And by the way, that was basically where I took the trade, wasn't it? I took the trade and then I took profit. I probably, wait, was 20 my profit target? Let me go back and double check. Okay, I took 18.5, so I took it off at 19.5. So yeah, I probably could be letting it ride a little bit. Anyways, okay, but if let's say that we have an algorithm and the algorithm is trend is down, so anytime that I get to like 0.6 I want to sell it or something like that, that's like that's not gonna work, right? But I think that what you were saying is, okay, trend is down, I want to sell it when it comes to 0.5. That's what you were saying, huh? I don't think I ever tested that. But let us pull up the code. Did I close that window? Yeah, I did. And I'm not 100% sure I remember. The J one, I think... Oh, no. J was... Okay, so there's 4 versions of J. Here's one. My delta... Oh, this one is using the resting orders. Balance. Okay, yeah, it wasn't J. That's weird. So I remember J being the one that I thought worked really well. So it was probably more like Brandon or something. Oh, no, well, I don't think that I ever had one that was like those two together, though, for sure. See, here's one I'm using inventory cost basis. Yeah. So what was this one? Yeah, if we're crossing above the cost basis and we're also crossing above our delta is positive and all of the time frames are in confluence and whatnot, then I go long. Oh, okay. So this is where it's like, you know, this was kind of like curve fitting, right? And I knew that that's what it was, but I was just kind of trying to get results and see how it behaved, right? And sometimes curve fitting can kind of tell you a little bit about how it behaves. That's my excuse, at least. It's basically saying, if I cross above this line right here, if I cross above this line and I'm seeing other certain things, then I go long. That's what that was. That's what that one was. Okay, Indy is saying that if we have been above the upper line for 5 bars, then I go short. So this is the one that I'm talking about. This is the one that I'm interested in. Oh, I'm not even showing you the fucking, what was wrong with me? Oh my gosh. Okay, this is the one that I'm talking about. Okay, so this is saying, I'll pull this over here. This is saying, if I've been under here for long enough, then I go and I trade it on it bouncing. Okay. And let's see here. It won't do anything if I don't have a position. So once it gets that signal, then it's just looking for come back up here. Yes, it has a set stop and target. Okay, that was the trade. Okay, was if you go across the line, are they likely to revert? And my recollection was that it kind of worked, but it did really, really poorly on trend days, and my live results did not match my backtest results. Okay, that's what it was. So now we're saying, what if you had this and you had the market order imbalance there together, and then you took it? Okay, cool. But the problem is still filtering out the trend days. How do you filter out the trend days? And today, I think, is giving us a really good example of like where there's problems with this, because, you know, this move right here in particular, because like it's definitely shifted, right? there are spots where you might have tried to go short here and everything, depending on what strategy you're doing. So like, but this one would have worked. This one where you said we touched it. Maybe you don't say it has to be below it for 5 bars, like that indicator says, but it touched it and the imbalance is extreme. Go for the reversal until the imbalance comes back to 0.5. That seems like a doable. Seems doable. So I could write this up really quick. I actually, this might be a good example of where, because with those indicators and stuff, for one thing, I don't think that imbalance is caching. So I probably need to add caching to it. The cost basis is supposed to cache, but I seem to recall there being issues with it on replay, and I had like found a solution and I wasn't sure if I had fixed it. So now is a good time to try and fix that. There we go. Let's try this. What should we call this? We need a code name for it. What should we call it? Okay, so I think that we should call this one Home Wrecker. That's what I'm going to call it, okay? Because Uzi's kind of the one like proposing the idea, and that was the episode that character came from. That's what we're going to call it, okay? Calculate on bar close. I think so, okay. Why do I have 2 versions of this? Oh, I see. Okay, I was just not even using that one. Maybe I should be doing this in Helix. Let's try that. Let's just save this for now. Open up a new big shell. Let's make this a little bit bigger of a window. Okay, perfect. Okay, and then I'm also going to make this a little bit bigger. This one I'm going to open up. Indie. Okay. So now I can go here and I can go yank. Right here. Then we will also need SPS. What is it called? SPS, market order imbalance. These should be this. Enter description. Match in your quote marks. Change. Reversal when inventory cost basis is at stop out zone and there is strong imbalance in market orders. So I think that I want to start out with smaller numbers here, but 1. Oh, I'm doing it on, he wants to do it on each tick. Well, that's okay. Actually, want all of this. Right there. Oops. There we go. I think that I just do that for now. And then we also need, oh, and this is supposed to be underscore inventory. Okay, and then we also have underscore imbalance equals SPS market order imbalance. I don't think that I should have to pass. Oh, no, wait. It is a window. There's a window that we will call period. Okay, so we have a period down here. Not quite. I do need these, though. And just script property public int period get set. Okay. Oh my gosh, I tried so many different, like all of this like commented out stuff right here is like different versions of it. Okay. But these, I need these. those just allow us to do the risk management stuff. So I think that this part right goes up here at the top. Manage risk. And then if close of 0 is greater than inventory dot break even short zero, and the, let's see here, what was it called, underscore imbalance of 0 is greater than shall we call it threshold? Let's do it like that. Yeah. So this one will be upper, oh, public, double. Oops. Upper threshold. This one, and just delete this. Copy this. Okay. Lower threshold. Enter long. Oh, I also want, I think I should do this. I don't think that this part will matter, but do it anyways. And position dot market position. For a second there, I thought my clock said it was 9:15. I'm like, holy shit, I really lost track of time. But no, we still got 5 minutes left. Market position equals market position dot flat. Enter long. Oh, so this whole bit right here is there we go. So then this one should be the opposite. Break even long of 0. And imbalance is less than lower thresholds. Enter short. Yes, it's home record. That's what that's the code name is home record. Okay, so something that's missing here is I do not have this bit right here. Right here, yes. Okay. That'll help. Doesn't like that. So it's giving me the errors now. I'm looking at it on the other screen. Oh, that's odd. I see. Well, what is resting orders v2 is there, isn't it? Hold on. I think it's just called resting orders now. Oh, no. It's not. It's this one's okay. And just fix it. I'll just fix them real quick. Because I renamed one of the indicators. Something like that. Okay. So now it is still telling me the type or namespace SBS market order imbalance could not be found. Why not? Because I'm literally copying the name of it over there. It was there, so I don't know why it's not. It is line 34. So if I come in here and do SBS inventory, no? Come on. Market order imbalance. Period. You went short on GME and it went to the moon. Oh wait, is it moving today? Oh, no, it's been mostly down. Must be talking about earlier, huh? Oh, you know what? I must be crazy here because that is definitely misspelt. Market order imbalance. When I put them next to each other, I must not have actually been truly looking. Oh, come on. What was this? That's a little bit better. Streak limit. Current P&L. Oh, yeah, okay. Oh, no, it was this one. Did I not copy over? I guess it did not. Okay. Oh, yeah, okay. Okay. Oh, it didn't save it right. Wait, did it not save that? It did not. That's funny. Right there. Market. I know how to spell, guys. I promise. I'm missing a few parts here. No, that's weird. Well, I'm gonna have to look at that part later. 'Cause it's time to go. It's almost there. There's just a couple of variables that are like misspelled and things like that. So I'll deal with those later. And maybe tomorrow I will have something. I'll have something that will run at least. Maybe not something that will backtest. Congrats to the new generation of GameStop bag holders. Well, so I wouldn't say it's over yet. But if it is below 34 by the close of Friday, I would say that this is kind of fizzled out. All right, well, guys, I gotta get going. I will see you tomorrow. We're still only at 20 half, so I gotta pull back, but only a small one. But anyways, I'll see you later. Stay excellent, team.